Hello and welcome to this latest video update for TR European Growth Trust. Today I'm joined by Ollie Beckett, who is the fund manager of the trust. Ollie, thank you very much for joining me today. Now first off, it's been a while since we last spoke, and in that time equity markets have bounced back since Q4 sell-off. So in that time, how has the trust portfolio fared?
Along with the market, the trust has performed better. We're up probably just over 9%, I guess, versus an index of around 7%. We've lost a couple of percent clearly because of sterling strengthening versus the euro, and it's a sterling denominated trust. But yeah, along with the market, we've tended to perform a little bit better after the disappointments of last year.
Now it looks like there's been quite a bit of activity on the portfolio list. So what can you share with us about any new names or positions exited in the year to date?
Well, we've exited a few names, mainly if we've had any concerns around the balance sheet being stretched. So Belgian company called Ionbeam in the sort of cancer treatment area, but where the balance sheet was very stretched. And other companies where we thought the valuation was very up with events, things like Tomra, who do reverse vending machines for plastic bottles. We just thought they were too fully valued. And we've added a couple of names, names like Sherved in credit information and credit management. And other names like Boost, which is a Swedish online retailer. In fact, both of those names we've held previously. It's just after the sell-off of last year, we found the valuations far more attractive. So we're finding new ideas, and valuations are attractive.
Now looking at the trust gearing, it's been almost halved since the end of November. So why has that come down? What's the story there?
Well, a little bit just because the markets have performed a bit better, so that brings the gearing down, just by sort of default. And also, we've been able to reduce the gearing in Q1 is the truth. In Q4 last year, there was just no liquidity. We just couldn't do anything. We had to sort of sit back and watch. So we're sort of in a more neutral position with about 8.5% geared currently.
And finally, what's the mood on the desk as we head into Q2? Has anything in the first few months of 2019 surprised you or influenced your thinking in any way?
Look, we're cautiously optimistic about the year ahead, actually, because for one thing, sentiment's just massively negative. Europe's seeing massive outflows. And if we see any stabilisation, and there are some small signs of the economy stabilising, and particularly actually China, because what you'll see is that Germany's very geared into China, and Germany's been the worst performing market since the start of 2018. Even worse than the UK. So the data's almost been so bad, it almost needs to get better. And then so we'd be pretty optimistic about the sort of year ahead. In terms of things that have surprised us, well, political things that roll on. I mean, whether it be Brexit or trade wars. But any resolution to either of those would be massively positive, particularly the latter, trade wars. I think hoping for a Brexit resolution is probably hoping too much. But trade wars, if we can get a trade deal, I think it would be very positive for Germany.